welcome everybody to the Finance and Audit meeting today on Start with our agenda. Can I have any apologies for absence?
We have Councillor Dyer, Councillor Wojciech and the Mayor.
Are there any declarations of interest on the items? Are there any written requests to see for dispensation for postponement of pecuniary interest? Therefore, there is no need to grant any requests for dispensation. Number 6 on the agenda is to receive a presentation on our investment funds, our market list of CCA. Thank you.
Okay, good evening. Thank you for the opportunity to get out of my house. I'm deeply grateful to you. So you've got some money with us. We are CCLA. For those of you that may not have come across us before, we are a fund manager that looks after only church, charity and local authority clients. So we manage just short of about 14 billion now, I think, and somewhere in the region of 35,000 clients. Within that, we count about £3 billion worth of public sector money across 750 public sector organisations, including your good selves. I'll talk briefly about the cash fund that you have with us, but I'll elaborate more. I won't dwell too much on that because it's not very exciting. Interest rates are appalling. I'll spend more time talking about the investment that you have in our local authorities property fund. So cash fund first, something called the Public Sector Deposit Fund. It's a AAA rated money market fund that was launched just over a decade ago in light of the Icelandic banking crisis, if you recall that, nigh on 13 years ago. It's designed with security as the first priority. So say AAA rated, we achieve that by placing cash and cash only with around about 30 different banks and building societies on any given day. You have daily liquidity to that fund, so you merely need to instruct by 11:30 in the morning and money's back in the account by close of business that day. Sadly, however, interest rates, as I've already alluded to, are pretty derisory at the moment. Base rate is at the all-time low of 0.1%. We seek to pay you a return on that. That's as close to it as practically possible after we've deducted our fee. So we are at close of business today. You got the fantastic return of 0.0218 on the £34,500 that you hold in that cash fund. So as I say, I won't dwell too much on that one. I'll move on to the local authorities property fund, far more exciting. You invested £250,000 in the property fund at the end of October 2016, and you've had 19 dividend payments made every quarter. Total amount of dividends paid £50,219. Figured out that's about 4.2% return. The other bit of good news on that is the £250,000 over the last so the valuation is just short of £258,000. As it were. It's been an interesting time, as I'm sure you will appreciate, over the last 18 months or so. So if I perhaps turn the clock back a wee bit to March 2020, suspended the fund, and it was suspended for 6 months. We get this valued every month. No faith in the valuation they'd given us, so we qualified what they said. Ended for 6 months. We reopened at the end of September. Next thing we said to clients was probably about the end of April, beginning of May. Expectations on income, and I do recall a client emailing me. I expect no income whatsoever on this fund. We estimated at the time probably between 70 and 75% of what we paid in 2019. The outcome was much better than that. We paid 98%. Reasons for that, I'll talk through the asset allocation of the fund. Commercial property. If I just give you a wee breakdown on what we own, we've got about 34% in what we call industrials, which is predominantly distribution, so side of motorways. Part of the sector, giving some excellent. 10% in retail warehousing, of hope, if you like, on the retail side. So the etc. have performed pretty well over the period. So we're quite happy with the investment. 34% in offices, and before we started, Liz raised the office sector. So I'll spend a little bit of time explaining that in a moment, if I may. Then we've got just 3% in shops. So we've been exiting the high street probably for the last 6 years or so anyway. The wall, it's just that COVID is sort of exacerbated and then we've got a range of assets, but it's about 14.5%. We've got about 3% in cash at the moment, so we're a bit cash heavy at the moment that we're looking to. Names, if I may. Within the other section, we own a couple of travel lodges. Challenging, also two. What happened with Travel Lodge, we own one just in central London by Tower Bridge, Brighton on the seafront there. Travel Lodge applied for a CVA, the outcome of which was that the assets that they occupy were graded best to worst, A to C. Ours were graded A. Travel Lodge have paid in full and continue to pay in full. So Travel Lodge kind of went away as an issue. I'll name some other names, and it won't surprise you to hear that the names I'm going to mention are within that very small sector of the shops that we own. Cafe Nero, we had an issue with Cafe Nero. We got a outlet in a multi-let office space down in South London. They're not paying. Waterstones, the bookshop, we own a bookshop in Reading. They're not paying their rent, but we're challenging that. And the one that generally raises the eyebrows is Boots the Chemist. Boots have hidden behind tenant protection legislation during the COVID period and refused to pay their rent. We are aware that they are very keen to pay up. So we're in negotiations with them. However, we are holding out because they owe us some legal fees now. So Boots has been the one that's raised the major eyebrows because they have been open throughout the duration. So I've named 4 names within that, but consider that we've got 78 properties in this fund and something in the region of 250 tenants. So 4 out of that lot, we think we've done a pretty good job. Let me spend a couple of minutes talking about the office sector. As I said, we've got about 34.5% in offices. And I suppose our take on it very much is that if it's central, if it's high quality, if it's close to the travel hubs, if it's close to the restaurants, the bars, etc., the shops, it will do fine. If it isn't, it may be challenged. So I think what we found is, and we've actually relet some office space during the last 9 months. The tenants that are taking those spaces tend to be organisations looking for less floor space, but wanting that high quality. So I'm not denying that I don't think all the data's out yet, but our play at the moment is if it's high quality, if it's in the middle of a city, Bristol, Leeds, etc., we own stuff there, it will do fine. I think those more likely to be challenged will be out of town sort of office campus setup. So I did a presentation to a council down near Reading, and one of the councillors, a member of their family, worked for Vodafone down in Newbury. It's not in Newbury, it's about 5 miles from Newbury, but it's on the A33 in the middle of nowhere. They've been told they're not going back to the office. So I think there are definitely some challenges ahead in the office space. The other comment I would make is that offices can be something else. So with the whole sort of reconfiguration of what town centres might end up looking like, we may well have some assets within our own portfolio that we think actually that could be residential. We wouldn't do it ourselves, we'd get to planning permission stage and we'd sell it on to a developer. So we've always got a plan and a strategy behind each of the assets that we have. The other good news is, during this period, nobody's redeemed, nobody's wanted to exit, apart from one parish council last month that took 10 grand out. And the fund is 1.3 billion now, so it's, we could easily manage to pay them back. What else? Positive inflows. So actually, since we reopened at the end of September, we've probably had about 35 to 40 million come in. Been experiencing the last sort of 4 or 5 years, but I think that's obviously because councils are, they're counting the cost of the pandemic at the moment. They the ability to invest long term. They're nervous about it. They're just keeping it in short term cash, like our deposit fund. Valuations have gone up. So maybe if I turn the clock back a little bit further, you invested sort of just after the Brexit referendum. You came in the October after we'd had the vote, the referendum in the June. What we saw from the time you came in was about 2 years of capital growth. Then we got to late 18, and I think everybody realised, oh, Brexit is going to happen quite soon. And started getting a wee bit worried, and valuations went down probably for nigh on 2 years. Since we reopened the fund at the end of September, or at least since November, we've had 10 consecutive months of capital growth. Hence why your current investment is worth just short of £258,000. So that's good news. Transaction volumes have improved. We made a couple of sales, so this is sort of highlighting what's going on out there. We sold an industrial shed, a distribution shed on the side of the M6 in Warrington. Valuation at the end of last June was 9.6 million. Somebody offered us 19.7, so we took it. Similarly, we sold an office lab asset that we own on Cambridge Science Park, actually occupied by AstraZeneca. Valuation at the end of June, 30. Somebody gave us 45 for it. So actually, there's been some huge sort of valuations or huge uplifts in terms of what's been paid. That, of course, has given us a little bit of a challenge, a little bit of cash in the fund that we're looking to invest. We've got 2 significant assets under contract at the moment, so fingers crossed they will go through. They're both distribution centres. I mean, we're very keen to get hold of more distribution centres. The challenge I think the UK has is there's not enough of them, and they're getting pricier. But we've got 2 under contract, one near Cambridge and one near Winchester, so hopefully they will go through. And just final comments to make. We're hoping to increase the dividend during 2021, so we should be on track to do that. The total return for the year ending the 30th of June, so this is income plus capital growth was 11.73% compared to a benchmark of 8.49. So we're well above the benchmark. So positivity and optimism, both income and continued capital gain. So this happened in 18 months. And what we've managed to open is in terms of if we're cashing, debt upon cash, don't believe wrong unless the recovery starts going on. The Bank of England is suggesting that we don't see interest rates rise until at least quarter 1, maybe quarter 2, 2023. So that cash flow that we manage, 2 basis points, it's still around an 8 there. So, a return of over 4% and something else is giving you some strong income for us. I'll pause there. 15 minutes. Any questions? Yes, sir. 2 related questions, I think. So, are you looking to actively buy and sell properties, or are you just taking advantage of opportunities when they come along? No. Is the one? Yeah, and linked to that is you've got your mix of portfolio. Do we have some? I think you said 34% exit and 34% debt. Do you give a sort of a commitment to your clients that you will operate within a tolerance level? Not necessarily. It's all about the asset. Yeah. So what's the first question? You actively buy. Yeah. So we describe ourselves as active managers. What that means is active at the beginning and at the end. So we will acquire a property. We will identify the opportunity to improve that property. Yeah. And we will spend some money doing that. So that might mean it'll be void for a period of time. We then bring in new tenants and that little rent. And then we get sort of 4 or 5 years down the line, they're all, we can't actually do much more with that. Sell, start again. And active management is all about that. It's also about identifying what that asset could be in the future. I've mentioned offices, could be residential. There's travel lodges. I mean, the one that we own just by Tower Bridge, I don't know if you know that last one. So I used to look at 25 years ago, it was pure offices. It's 50% residential. And we've got this massive travel lodge sat there. What can you do? Residential? That would be an expensive residential redevelopment. But, and that's a long lease, so travel lodge is sort of 30 years. So, you know, if they want to go, then we've got a plan and strategy behind it. But also, if you looked at the makeup of our portfolio at any given time, around about 50% of the asset, 50% potentially, will be on leases of 5 years or less. And that's quite deliberate because it does allow us to do that, what I've described, get to that asset, exit the tenants, spend the time and the money upgrading, and then go into the higher rate.
In theory, and I'm not going to suggest you don't need to do this, you could dispose of all your warehouses and go holding it in office. And we do either way, we're just adjusting it to manage the problem. We're not giving you any guidance system what we want.
You're putting your trust in us, not me. There's a property team that sits right behind me and been doing this for 20, 30, 40 years. Property's been there 30 years. So you are putting your trust in us to use our expertise in order to do that, which I suppose I'd use the example of retail. I mean, I had a property 5, 6, 7 years ago that said, we need to be starting to exit, we've got too much exposure. And I fully envisage that, you know, with the potential challenges that may be within the office environment, we will reduce our office exposure. And I would describe we've got 2 distribution centres under offer at the moment. So that would increase our distribution stock. But you need a balance. It's all about balance, isn't it? And spreading the risk.
Yeah, we're trusting you. You're not giving us any boundaries.
No. At the end of the day, I mean, what our head of property will say is, it doesn't matter what the asset is, but the asset has to be right. The asset has to be right, and the tenant has to be right. It has to be robust enough that we can be confident that they're going to pay their rent. Because at the end of the day, that's your income. Yes, sir.
There have been questions raised recently about very large asset managers, Church of England and the like, and their ethical investments. What are your sort of rules, parameters?
Okay, so consider who we are, and actually, what I didn't tell you is we are mutually owned. So we should note that we are part owned by something called Central Board of Finance Church of England Investment Fund.
But I didn't. I wasn't, leading that.
We are part owned by a charities investment fund, and we are part owned by something called the Local Authorities Future Investment Trust. So we describe ourselves as a mutual, and we act on behalf of our clients through the auspices of those 3 organisations that oversee us and govern us. So you would expect that the heart of everything is that ethical and responsible investment. And so we run a range of mixed equity funds, etc., where that engagement is far easier to do than it is with a property fund. However, that said, our objectives with, when we buy a property, we identify what the opportunities for that property are. And if it's upgrading, it's all about meeting the environmental standards, making sure that we're putting the solar panels on the roof or whatever. So we're doing all that, putting the bike parks there so that people can cycle to work, etc. And the one thing that we have done, we did it 4 years ago now, I guess, so it's still a rolling program. We introduced what are called green leases. What the green lease allows us to do, and it's quite easy, if you've got someone like DHL in a great big shed on the side of the motorway, you can have a conversation with DHL because they're the sole tenants, and they'll agree to put the solar panels on. No one's pushing back against that. When you've got a multi-let asset with 10 tenants, the problem there is everybody engages a lawyer and upgoing fees. So what the green lease allows us to do is to actively engage with all 10 of them yeah, under the umbrella. And again, I make that comment, no one's pushing against it, everybody wants us to do these things. So as you know, as we progress, we've only been doing it for 4 years on the property side. You know, those assets will get greener and greener as time goes on. And you know, so that's part of the strategy, and you would expect us to be doing that as a manager.
So locally,
Yeah.
there is a dilemma
Yeah.
between granting planning. Millian colleague here will know more about it. Planning permission for solar farms on green belt, green fields, possibly agricultural, and the suggestion that every roof on every large factory, which you know there's a rationale behind it, should be covered with solar panels. Now you're in a position, as many other large asset funds are, as you say, with the green lease, to make this happen and to remove that dilemma of solar farms, renewable green energy, being placed on green land, green field, agricultural areas. Is this a direction you're going to travel in? And no, I don't know, David.
We don't own things like that. I mean, we own, in this fund, we own a bunch of properties. So what we're trying to do with those properties is make them more environmentally sound. You know, within the other funds, you know, we do own solar farms, wind farms. We do buy those things. It's a small part of what we do, and it's an increasing part of what we do. You know, we've got a couple of funds where we've exited fossil fuels. Yeah, we're not in those funds, but we've exited fossil fuels. But what we're doing is that engagement piece. So the process is that you get away from the worst of the worst, who you just think are not going to change. But you engage with the others who are on that journey of change, and you help them do that. So it's a process. It's a long process. I guess the point, we've been doing it for a long time, because CCLA is CCLA. And, you know, we were mad 15, 20 years ago. It was mainstream. Yeah. So this whole mission to save the planet, whatever phrase you want to give it, is all of a sudden become mainstream from management. But we've been doing it for an awful long time because of who our clients are, because of how we're running. The Church of England, to be fair, it was leading. Does that answer your question?
No, that's very helpful.
Thank you. Any more for anyone? Okay, we should have
Thank you very much.
Thank you.
Thank you.
Thanks.
Back to the agenda, we have the draft open minutes of Finance and Audit Committee of the 8th of June 2021. Do you have any questions or issues arising or on?
Thank you. Quick one in terms of the final minute on the budget environment, and we did discuss about the potential to get a public works loan. Is that any of that included in this meeting?
Yeah, I brought a response, I think it was to the subsequent town council meeting, to say that we're being in touch with our local authority, and they advised that one town council has funds. I think that's in the subsequent town council.
Any other questions? Okay, can we then please have a vote on accepting the draft open minutes of the Finance and Audit Committee? To the town clerk's written report.
The first item really is just there's no further update. Further response as yet from the external auditors. There is a deadline at the end of the month. I think last year it was about 2 weeks before the deadline, and I eventually contacted to ask questions. But as I said, I'm no response of the confirmation submitted, so I will bring that. I will notify members when we have the report back. Hopefully there won't be anything on it, it will just be a case of noting at the next meeting. If there is any action required, I'll discuss that with the town clerk. Our email to advise them of what responses.
Okay, so the next item 8.2 is to receive management accounts for the period 1st of April 2021 to the 31st of July 2021. There are notes and some explanation in the town clerk's open report. Are there any issues or questions anyone wants to raise, or are you happy to receive them? No, happy to receive them.
Yeah.
And to review the council's reserves policy as part of the budget process for 2022-23. Obviously, I think this is going to form part of our budget process as we go towards the end of the year. A very significant part. Obviously, our reserves policy we will have to be mindful of that as we work through the budget. And be prepared to take note of the advice from town clerk and our financial officer. But are you happy? Yes.
The members will recall that last year there was a change made to the policy for the general reserve to maintain a level of at least 25% of the annual budget expenditure, which determined to be a prudent measure to take. Previously, it was based on the value of the annual precept, as we saw. The challenge that the change in the reserve policy has made is that we now have two variables that neither of which we will know by the time the budget has to be agreed. So we won't know what the level of the general reserve will be until sort of the year-end accounts are done in next year. But we also have to agree the budget in January. So there will be work done over the next 4 months in trying to get as accurate as possible a prediction of what the deficit will be this year in order to determine how much the general reserve will fall. The other aspect of the formula, if you like, is that annual budgeted expenditure will not be determined until the budget is finalised. So this sum, if you like, becomes quite hard when ultimately the budget will have to be signed off at a point when a lot of things involved estimates and forecasts. As things stand, rather than monthly management accounts, I am now producing a forecast based on the average spend per month and how many months left of the year. Obviously, as we get further through the year, then that figure becomes less of a forecast and more of an actual. Sort of thing. The current situation is that while the budget indicated we would be in deficit by this point, we are currently in a small surplus. The reality of that is a time issue because of the bulk of the expenditure in the current financial year. A is the stuff that's normally in there, for example, grant expenditure means that tends to happen towards the end of the current calendar year. And the biggest expenditure this year is the maintenance expenditure in town. As you can see from the scaffolding outside, we're now sort of well into that, and the first bill, the first scheduled payment on that contract has come in last week. So in the next 4 months, we will see substantial expenditure, which will ultimately be reflected in what the budget prediction is, i.e., we will be running a significant deficit this year. So I'll obviously keep members updated, but my concerns, if you like, at the moment are that this policy, in order to adhere to this policy next year, either there needs to be additional expenditure saving other than the one-off costs of the town hall maintenance that are being incurred, this year, so obviously that's a huge part of this year's deficit. And the restaurant trends.
Can I just ask a question at this point? So you're overlapping here the reserves policy with our budget strategy for income and expenditure. Well, you just said that there need to be savings on our expenditure. I just want to get
to fit within our policy of having reserves.
Sure,
We don't have to adjust our behaviour.
Absolutely. So what I want to know is, can we bring up any points that you're under point 4 budget strategy now? Because you mentioned it and you've used words like huge deficit, quite an emotive word,
Okay.
and it's not a positive report in the nicest possible way.
Yes, yeah.
And it's not meant to, no.
No, again, members might recall a couple of years ago when we get to this point in the year where we're trying to set the budget strategy for the following year. It's a chicken and egg, which comes first? Do you decide what the reserve policy will be and then set a budget to adhere to that, or do you set the budget and then work out whether you need to adjust your reserve policy afterwards? Ultimately, they come hand in hand. So yes, while it's been brought up at this point, there is a consideration as to whether, if members, when we come on to the next point on the agenda, i.e. the budget strategy, if members feel that it is unlikely that the council would wish to substantially reduce the amount of expenditure next year or to significantly raise the preset next year, then it could be a case of, well, is there an argument for adjusting the reserve policy where the council is still acting prudently, but for, if you like, for the sake of next year, the decision is made to deliberately not adhere to the reserves policy, but with a view to re-implementing the strategy and trying to maintain this level of 5% going forward. So yeah, I'm not saying make a decision on reserve policy now and then we talk about something else and we can't come back to it, but if you like, if members believe that that reserve policy as it stands, i.e. 25% of the net expenditure next year should sort of be covered by a general reserve, then you need to be aware that that will have considerable implications when we're talking about the budget, which is the next one.
Chair, we can change we know it's the same. So 6 months time, we can say we're going to go 10% instead of 25.
We can do. I think from an audit point of view, the auditors would be anxious that the decisions on the budget are made, responsibly with foresight on the impact of what that will mean to the council's reserve going forward. There is a general recommendation of a council of this size. I mean, there are no hard and fast rules that you're not told you've got to maintain 25% of expenditure or whatever it is. And there will be some councils who might not have any reserves, or in fact, I believe there were a couple of councils in the last 12 months who effectively declared bankruptcy because they've run out of money. So ultimately, the only money the council is guaranteed, the only income the council is guaranteed to receive next year is the preset. Potentially, even without putting up the baseline, the preset receiving may increase because there's development ongoing in Stratford. So obviously, every new property that comes on gives an income to the town council through the preset if it maintains its level. So yes. The reserve policy could be amended when at the point when the budget is set. If council say we acknowledge that we aren't adhering to the policy at the start of the process, but we've gone through this exercise and we still believe that it's prudent to amend it, then that's fine. But I think obviously I'm not suggesting to you that you say, well, we will not having any reserves next year, and I'm sure it will be fine.
Well, personally, I wonder if we're at the start of this process, perhaps that's probably the path to follow, because we can't say, right, well, we'll do X, Y, Z, now. We don't have enough information to work through enough to actually decide what the most important things to do. So, with my colleagues' agreement, I suggest that we carry this forward with us as part of our budget planning process and setting budgets. Is that?
But that, we are still going to raise any issues or suggestions under point 4.
Yes.
About, yeah.
I'm
I'm bursting.
Okay, so can I suggest then that the decision of this meeting is that we have reviewed it and we will carry that review forward as part of our budget process?
Can I,
Yes.
sorry, can I just ask a question about the designated town hall maintenance reserve, the designated reserve? Which committee's responsibility would it be? Or would it be for our responsibility to kind of determine to top that up to a reasonable level? So after this work again, we have another review in 5 years' time. We've got enough funds available in 5 years to pay out of that reserve.
I believe the actual the town hall falls under the community services. But I think given the nature of the fact that the town hall is also the offices for the town council.
Yes.
It's sort of a bit of a crossover, if you
Yeah.
like, that the town council as a whole want to consider that reserve going forward. But certainly the community services committee have an input on what it should be. Having also said that, as I alluded to in my report, there is a town hall sub-panel group that's been meeting for quite a few years now. And generally, they are putting forward, they are reviewing situations and putting forward recommendations that can then be adopted by the boards on certainly new structure-based community services. Just on following up from your point, what I would say is in the papers that I've published, I've assumed that the entire reserve as it stands will be used towards the maintenance being good this year because it is more than the amount budgeted. So there, at the moment, there is an assumption in the paperwork that I've given you that reserve will fall to 0, which, as I've sort of said in the report, the members have previously suggested that they wouldn't want to do that. They would look to try and keep, or certainly top it back up over a period of time, ready for future bills.
Thank you.
Can I propose then that we keep the review of the reserves policy as a rolling programme part of our budget setting, and we revisit it as part of the process to ensure that we have an agreed improvement results. Whether we can change the policy or not, we work on that. We work through it. So probably we process as well. And do as we go on as part of the budget process. Next, 8.4. To consider and recommend the budget strategy 2022-23. We are requested to consider guidance that we give to the committees as the officers. And under the open reports, the approach has been to compile budgets on a program need basis, and as directed otherwise, officers will continue to budget for expenditure on this basis. Preliminary budgets will be closed to spending standard, which is October, November round of meetings. Review as part of the budget process at the end of the next finance audit committee meeting in November. The principles recommended by the Finance and Audit Committee should then be implemented in all departments. And as the town clerk says, there are likely to be challenges ahead. We are carrying challenges through this financial year and part of last year. And we will be planning our budget on the basis of several known unknowns, and if you want known unknowns, too. We have used research, we've had projects, and we've done work, and I think part of the budget process this year should be to be cautious until we have a clearer idea of what is going or likely to be heading our way, especially in terms of people coming in to the council. We have a fixed precept, but we have on the basis of other budgets, relied on a considerable amount of income from things like markets. Obviously, this will be coming up, and these are coming up. But we need to be sure that the commitments we make to our spending our projects, we can be meeting them financially in a prudent manner. As town clerks, if we go on the plans that we have at the moment, the bond plans that we have in the previous 2 years, in terms of the revenue we're expecting, there is perhaps a need to review very carefully the plans that we have, the commitments we're going to make in the future, so that we can have whatever budget we end up with, we can justify it, and we can justify an additional reserves, building up the reserves that we've depleted. What the clerk has said, but I think we need, if we are happy with the recommendation in here, is that you would prepare a budget for us, and then we can because in order for a committee to make a plan, they have to know what they're planning with. If the committee wants to make a project, and wants to commit a sum of money, that needs to be done in time so that you can see essentially where that money is going to come from for that committee to do their work. So I believe the recommendation is here that you would, on the basis of previous years, create a budget which we can then work each committee to for their plans, and then fit to see whether we are meeting.
Just to update you on, obviously working on the first budget, which is where I've got the forecast in for what the impact will be on the general returns, partly payments distributed for this winter. The process, as it had been in previous years, essentially is that the starting point for next year's budget is obviously the current year's budget. So, in terms of, if you like, the headline warning, if you like, that the current level of expenditure is unsustainable, that really stems from the fact that there is a huge potential deficit this year, primarily because we're spending between £200,000 and £250,000 on maintaining the town hall. In simple terms, you could, if you look at previous year's figures, that if we didn't have the building maintenance reserve, that would completely use up all the general reserves. Council. So, sorry, I was continue.
Just take 2 minutes.
2 minute break.
Richard, we have to have a break.
Oh, sorry. Yes, so sorry. So the initial draft will essentially be based on this year's budget. But there are also several figures in there that in previous years I've used the year-to-date actuals in the current year to predict what the expenditure is likely to be. There was work done previously in trying to identify what income and expenditure is fixed or guaranteed and what can vary. So that obviously potentially have an impact on committee decisions as to what they can potentially look at, not spending or deciding to spend more on. The overall thing with the budget is that if you like, we've been stripping out the obvious things, i.e. the cost of the town hall maintenance. The initial draft is still showing a deficit, and on the basis that as things stand, the deficit this year will breach the current reserves policy, and then the initial guidance would be that we should initially be aiming to have a balanced budget next year. So the first draft I will issue will show deficits because it's based on what's already there. The options there then are for committees to either look at things that they decide they can put expenditure on. Alternatively, there could be a consensus that if the council would be willing to increase the preset to try and cover some of the things that we feel money should still be spent on. Or conversely, council could decide that they will spend all the reserves because of the situation and then look to try and reinstate those reserves further down the line. As you'll see from some of the papers produced, the general reserve has fallen over the last 5 years, which is understandable because of the budget deficits and the project work being done and the town hall maintenance work due in some respects, or certainly the fact that there is now a 5-year-old maintenance plan in there and the work being done should put the building in good stead for 10, 15, 20 years hopefully, then this level of expenditure is not expected to continue going forward. But as I've said before, there is still a situation with the budget as it stands that it would still involve a deficit. So it's how that deficit is tried to, the aim must be to try and bring that near to the balanced budget next year. Or think of ways that the council could potentially raise more funds from other sources, but I'm not sure what the opportunities are there. We've obviously been hit badly since COVID because the town hall is closed, so one of the alternative sources of income was from town hall lettings. So we'll know from the monthly management reports we've lost that income. The other bigger contribution, should we say, is from the charter market, showing the fees. But again, the charter markets have been hit by COVID, so we've lost income from there. I think, as you see from the management accounts, ultimately the council relied very, very heavily on the precept, and that is essentially the only thing that can be sort of guaranteed next year, because the district council will determine what the tax base is, and the town council can determine what they want the rate charge and the property to be, and that gives you a figure which ultimately the district council will hand over. If you like everything else, becomes, apart from the fixed cost, for example, the rents we have to pay, non-commercial property rents, those are all in there, so I'll definitely work on that to give members a better steer on what I believe the underlying minimum fixed costs are for the various aspects of the budget. As I did last year, as well as the overall budget, each committee will have its own subset with the items in that they are responsible for. And so each committee will be able to just focus on their specific. So I'll give the general guidance must be to own more of a balanced budget rather than a deficit. And obviously considerations to whether another preset increase would be considered next year, but bearing in mind that the tax base is likely to rise over the next few years because of the development that is now happening. For example, RMP and Shottery, which are starting to, you start to see people moving into houses now, which hasn't been the case. So the tax base has risen very little over the last couple of years. Here, last year it went up by 9.92, the year before it was only 35.5, but the year before that it was over 200. So, who knows, potentially we could, in the next few years, see a bigger rise. Just again, for all members to be aware, if the tax base goes up by £100, by 100, then that effectively gives the town council, based on its existing tax rate charge, gives it just over £5,000. So even if the tax base goes up by 300, it's £15,000 to £16,000. It's not £500,000. And as I've said again in the paper, a 1% rise in the precept would effectively give us over £5,000 as well. So it would take a considerable increase in tax base or a considerable increase in the charge rate to replenish the general reserve that's going to be lost as a result of the deficit.
Thank you. Phil, can I just ask you, this is a historical question, but going forward, I may find it useful anyways. Do you know, can you say how much the precept has gone up over the last 10 years, say?
Whatever it went up this last year, it was 0%, all the rest.
In terms of there is, say, this report sort of included in the appendices, that they are showing the total amount of precept received over the last 5 years. It was only 2 years ago that the actual charge rate per household was raised. Prior to that, it being held at a constant level for 5 since
about 10 years.
15.
Oh, okay. But the amount of precept received by the council had increased over that time because the tax base has grown because of the development in Stratford. So, given what's going on at the moment, if the town council keep the charge rate the same over the next 5 years again, it is highly likely that the amount of precept received will go up.
I suppose where I'm sort of leading to is that if the precept had been increased modestly year on year, residents really wouldn't notice.
May I say, sorry, can I just speak? Irrelevant.
Well, it may not be irrelevant. And with the increase in tax base as well, we would be in possibly in a much better position than we are. So looking at the longer term going ahead, yes, in 1 year, an increase in precept isn't going to make a massive difference. But if we're looking at a 5-10 year planning horizon with modest increments combined with the tax base, that would, I would have thought, put the town council's finances in a much better position in 5-10 years' time. That's just I'm probably wrong somewhere in that, but those are my thoughts anyway.
The response I'll take to that is that until the recent budget deficits, the council's level of reserves were very high.
Yeah.
So to justify increasing the precept when there was a lot of money in the bank, so to speak, would be.
No, I understand that is. Yeah.
So it's only as a result of, if you like, some substantial deficits in the last couple of years that is. At the end of the day, don't get me wrong, there are reserves there. The council isn't broke.
Oh, yeah.
But there is a substantial deficit. We'll use a huge chunk of those. COVID situation, if you like, has added to the pressures because not only have we got substantial expenditure on the town hall, there's other sources of income that will fund the other aspects of the council is doing.
Thank you.
Yeah, did you say that you were looking at all items of expenditure, you decide whether they were fixed or variable?
So last year, I think it was agreed that I would provide in Excel spreadsheet the budget, and in that, part of that is set up, if you like, is that there's a column there which identifies every line as which I've reviewed with the town clerk, and in our view, it's whether they are fit for growth.
Right, so we have got that information, it's in that.
It is, so if you want to take a close look at that, and because I think last year, if you like, we distributed that saying this is what we've come up with, and nobody asked me to change that or challenge any of that, but again, if members could look at that and say, well, actually, surely this is a variable cost, and we won't have that going forward or whatever, then we've got all this, given that feedback.
If everything's going to be tight on, we need to look at that.
Yeah. And I think there's a sheet in overall that then gives us a set of the budget based on what the fixed costs are, so you then get a better idea of the minimum level of expenditure that can be expected. Yeah. I think from an income point of view, as already said, we could almost say that the precept is the base level that we maybe are looking to try and manage expenditure to, and then any additional income that we get in obviously helps any additional expenditure.
No, it's fine. Yeah.
When will you be sending those spreadsheets out for us to?
It will be out the next one. So.
Yeah, so Deputy Town Clerk. So yeah, well, I was sort of wondering what this item, because it's asking for recommendations on strategy. You've given us lots of things to think about. Are you after some clear instruction from us as to how cases for budgets or parameters you'd like us to?
I think yeah, it's the role of the finance and audit committee. If the recommendation of this group is that that you agree that next year's budget should look to be a balanced budget, that's the recommendations we made. So the committee know what they're doing. Know what they should be aimed for. If the thoughts are, well, the council's funding, projects that so the money will be found from reserve, even if that means we're continuing to run reserves. Again, it's that sort of approach where the committees do need to look at cutting their costs accordingly, or whether it's a case of if there is projects to be funded, then they need to bring those back. Options to how those will be funded, or can reserves be used to cover them. So it's a rolling exercise. But if this committee was to say, like, councillors should not consider a precept item next year, then that is like a recommendation. Council should not consider continuing to spend more reserves. It's one approach to take. If it's, as we sort of started off by saying, only expenditure, then the previous budgets have been based on necessary expenditure, deficits that we this year are known for to be on office. It's really, what is the strategy? Is it to aim for a balanced budget next year, or is it to still propose projects if they believe there's a justification to use reserves or whatever other?
So follow-on question, is it feasible to look at two scenarios rather than just one? Would that be acceptable? I think
so, because ultimately, as you may recall from the budget last year, that it sort of started off at one point, and as the process ran on, we sort of it will evolve. So it's the first draft is, I think last year we got to 8 drafts in the end. So yeah, there's different scenarios. Ultimately, as those scenarios play out, result in different options. So the council could then say, we'll vote on A, we'll vote on B. That again, I'm quite happy to go with that approach. It's really just to give some guidance rather than saying, here's the budget from last year, is that okay? That definitely won't be the case.
Thank you, Chair. I think we probably, obviously we're keeping all options open at this stage. However, I think it's prudent to look at budget reduction initially, and to go down that route, and then to obviously continue to look at raising the precept over the next few months, and keeping both options open. But I think we should obviously go for financial prudence first, is it worth us sort of wielding a stick with the committees to kind of instruct them to save an amount that would create a balanced budget? I do sort of note that if we want to build up some of these designated reserves for sort of things like the town hall, we need to generate some kind of surplus. So it's, we're very far away from that at the moment. Would a percentage reduction sort of challenge to those committees be a good strategy moving forwards? Open question.
Well, I can take a view on that. You can put as many percentage reductions in as you want, but it's just on paper. So what we have to do, in my view, is to look at things with a more commercial head on. And we are very lucky when we get into it, because that's like a free gift, an endowment. But what's never happened is that we've never really had a hard look and maximise the income potential. So we've got two areas, haven't we? We've got income and we've got expenditure. And we do have a loosely formed task and finish group to look at income opportunities. And we're going to have to do this in a very structured way. That probably won't deliver a lot of incremental revenue, regardless of what's happening in terms of COVID, certainly until spring, summer 2022, and possibly not until autumn, winter, spring, summer 2023. But we've never really, as far as I know, the town hall has never really looked at its income potential, and it's always relied on its precept, and it's very lucky to have done so. So it's become slightly comfortable with that. So the first thing to do is to look at our income stream and where we can grow our income, because the more income we have, the fixed percentages of the fixed expenditure, the percentage ratios are reduced, and that goes all the way down in commercial terms to the bottom line. But what we have to start also doing now is ruthlessly looking at our expenditure. And actually, when we look at it, and we heard from the guy who presented about our reserves and investments, that there are substantial companies now who are just not paying their rent or who are renegotiating them. Now, that might take a lot of bottle to do it, but if Boots are doing it, and Travelodge and all these other companies, we need to be looking at all our expenditure, regardless of how fixed it is, and we need to be asking the question. One is, can we negotiate different rents? Two is, are we using the right suppliers? So where we spend X times whatever on stationery, are we going to every single supplier, from window cleaner to stationery to insurers, and are we saying, is that the best they can do? So like all of you, I've just renewed my car insurance. I get my deal through, got my 40 quid. Bang, on the phone, it goes down by £20 on last year. The same supplier, the same insurer. And if I were running a business now, sorry, Deputy Town Clerk, I'd be turning around to my FC and I'm saying, I'm sorry, I want every single one of these bits of expenditure analysed. Are we getting the best value for like for like? And because whilst we keep depending upon the precept, which is lovely and fine, that covers a multitude of sins. So we get to where we are today. Now, I'm not saying we shouldn't be spending. I'm not saying we should have put the precept up. But we need to take a much harsher view, because we've got a huge risk here, let alone, huge deficits on paper. But if you turn around to people and say, I want you to cut it by 10%, the committee say, yeah, we'll cut that by 10%. And we may spend 20% less, or we may spend 20% more.
I think
it's not realistic to do it, in my view, as a commercial operator like that.
Yeah, I think that is definitely something that we should be doing, and also almost as an ongoing process anyhow. I think actually all the things that have come up, I don't think there is anything we can do. I think the idea of having the scenarios, council goes on exactly, reduces reserves, council reduces both, that would be extremely helpful, simply in a view of how much difference it would make and how much we actually have to change. I think it is completely reasonable for this committee to ask the other budget committees to look seriously at their projected spend and what they're looking at, and to review the items that are on there, rather than saying, well, we definitely need that. It was 6,000, therefore we'll put 6,000 plus a little bit for next year. I think that's definitely part of any sensible budget process, definitely in these times. I don't know whether a percentage reduction is entirely sensible, because if you say, well, please reduce it by 5% and then you stop, and we put up 5% and then that's not building up building. And also, there's no point saying, well, we're going to reduce our spend and not increase that. So I think part of the budget process actually is that we are asking other committees to say, this is the situation, this is what we're trying to achieve. We have two scenarios. Can you please look at reduction, cost on existing things that you need to go forward to, and potential projects, potential source of income, and what that would look like. So I think at this point in time, I don't think it's sensible to say go to committees and lose 10%. It's not thorough in our process. In my view, if in my workplace I go down line by line. Things as a habit.
Respectfully, no one's going to go down line by line. Like I don't see the committees doing that. I think we have to be very blunt with them and tell them.
I would ask. No.
But they don't know, half the committees don't know what's in, they don't even know how that figure of 6,000 is made up. So they've stuck a finger in the air and said, oh, I think it might cost 5,000 to put the Christmas festival or whatever. There needs to be more detail in there.
I think it's a responsible function, a responsible committee to actually look what you are committed to. And I think I can't imagine that any of our fellow councillors would take that amiss or feel that it was unnecessary. So sorry, Councillor.
No, thank you. I think as well, there will be perhaps some difficult conversations, because when finances are tight, as a council, we may need to, and we probably will need to re-examine our priorities. And it may be that some projects, and I'm not going to name any, but it may be that some projects the council as a whole would want to see absolutely fully funded, and that others we may, as a council, feel given the tightness on expenditure, may have to fall by the wayside. So I think a sort of an overall 10% reduction across the piece isn't really a satisfactory solution.
And I think also, if we work from a basis where we don't know what income is going to generate by the markets, if we put things, rather than cancelling, we put things to one side, and then the income is considerably more than we anticipated, then it is certainly something we can have, if you like, a basket of things that then could be considered in the light of more fortunate circumstances. But I'm naturally pessimistic when it comes to certain budgets, and I do like the worst.
That's why you're the chair.
Yes, pleasantly surprised. It's more cheerful than originally anticipated.
Prudent.
So, are we agreed that in terms of recommending a strategy that we ask the committees to work to the two scenarios that were produced by our officer, look at coming close as we can to balancing the budget, to look at the spend of specific items within their budgets to see that this is not a sum that is habit, but is actually considered and where it's come from, and to review expenditure and look at perhaps projects that could be deferred until we're in a better financial position. Would anyone like to add change?
What would the two scenarios be? I think that's the fundamental question.
I think we're going a bit early on this, we don't have to have a proposal. We don't have to move it forward yet, just because we don't have to construct it. This is what we do, we construct proposals without having had a good deal of time and consideration of what the implications of those proposals are, or where they might lead us.
Yes.
I think we've got to do more work, and I'm sorry, in terms of having a look at income and expenditure.
I think that is our recommendation. We have to essentially have a strategy of how we ask the committees to go forward. We're not.
Yeah.
So I think as we go through that process and the committees start having results from having reviewed and what have you, then we come to the point where we can start having a budget, and then we can start looking at what we are and what we're going to do, or if we need to make changes. But I think we need to, from this meeting, to have a structure of a plan of how we are going to go ahead with how we are going to do our budget strategy. I think the budget strategy is caution and review, possibly the scenarios essentially come from if we run is a comparison if we go on as we were, or we take a far more cautious approach. How would we reach that? I think that's what I meant.
And cautious could equal also severe.
Yes.
Could it not? I.e., as Councillor Curtis said, I'm not saying I'm open to anything,
No.
but cautious could equal having to be much more stringent or
Yes.
prudent,
Yes.
whichever you want to say,
Yes.
whatever adjective you want to put in there.
We'll say cautious, but meaning we are open to, we are going to look to see where we are on the scale between cautious and severe, what is necessary.
I think if the overall recommendation is that council should be aiming for a balanced budget, because the simple scenarios. Well, scenario one is you've got to balance the budget by cutting expenditure, or the other scenario is you say what you want to spend money on, and that will determine how much the precept would need to be raised to do that. So, like the papers that I provided, one of the figures, and I appreciate the very early process, but essentially based on the calculations of the latest forecast that we make halfway through the year, is that the precept to carry on with the expenditure as it stands, the precept would have to be raised by 24% next year.
Well, that's not going to happen.
So that's not going to happen, but that, if you like, that's one scenario. If you want to spend that money, that's the indication. Alternatively, if you are aiming for a balanced budget and cut expenditure, then obviously the indication of that is that the precept would either not be raised at all or would be raised substantially less. So.
And of course, the unknown is how much additional income will come in next year. And that's a really big question, but you can't guarantee that. So you don't know. We're not even in a position to plan for that. We haven't even got our strategy together yet to increase revenue.
There's if you like, an opportunity there. In the previous budgets, council's been fortunate in effectively by the budget understands or increased income from cemetery fees or whatever is effectively enabled the reserves to be grown, which is what has happened for such a long period of time, if you like. So I guess another way of looking at it is not endeavouring to spend money that you think you might have, but more sort of using that additional income to as part of the reserve replenishment strategy, which effectively is sort of what has happened in previous years.
I mean, just in terms of percentage, if you were running a business and you said you had an income of X, you would say I can only spend X percentage of that on that element of expenditure. And there are ratios, aren't there, and formulas that are stuck in. So if you say I've got an income of £1 million, am I spending 1% on stationery? If you go below £1 million, you're still only spending 1% of 900,000, 800,000, 700,000. You know, that's how it's done in business. Everything is built on ratios of its percentages. But we don't do it like that. We say we've got £6,000 to spend. We spend 6,000, whether our revenue is £1 million or £500,000.
Can I request at the next town council meeting, and I don't know the best format for this, either an agenda item or as part of the minutes for this meeting, that we verbally update fellow councillors on this exercise that we're asking them to undertake within the standing committee. So I feel like it's worth reiterating verbally.
Yeah, I'd agree with that.
Do you have sufficient consideration and recommendation for these?
I think one of the points raised that I think would also be helpful guidance is thought about asking committees to potentially prioritise expenditure. So, if you like, as a minimum, we will endeavour to identify what we believe are the fixed fixed expenditure items that are going to be incurred regardless, and then other items that are considered variable. That just gives some weighting behind that. Well, it's essential to do that. And that's, for example, I'm not proposing this at all, but just by way of example, you know, there are grants given to certain bodies that have been done for a period of time. It's the council's view that that should go on regardless of the situation, or potentially, you know, there is no way that in identifying expenditure that should that particular grant not be given next year, because that would cause problems for an organisation. But it's that sort of thing, because it's all very well for one person to say, well, you know, somebody else deserves that money more, but if council's view is we've supported that organisation for the last 20 years, we can't turn around now and simply say we're not supporting them.
We might have to make some hard calls. It's as simple as that.
Exactly, but it's really getting, you know, getting an opinion from everybody that is what council. And like I said, I don't mean to be all doom and gloom. You know, the council still has money. It hasn't got as much money as it used to have, but arguably it used to have sort of too much use of them. So, but it's just getting a balance now where we're sort of almost going past the point now. We can't carry on running large budget deficits and still have a brilliant financial strategy going forward.
Okay, thank you. And then do you have additional items to do verbal reports?
Just one item to make comments about in terms of we were saying that the statue of Shakespeare was taken away for restoration. Just we need to advise the honour about the situation of that is that those currently looking to try and get grant funding for that restoration work. So because the grants cannot be awarded retrospectively, but at the moment the work is not going ahead until further down the grant process. But at the moment there is no funding for that work to be done. If you like, arguably the potentially reserves could be used, but
what we're saying is when it's all clear, we'll have a void there, won't we? So that's what we're saying, until we can afford to have it replaced. So where Shakespeare was sitting, there will be nothing, will there, in that?
Well, the intention is that statue.
No, I understand, but until we get the grant funding for it, it won't be repaired, therefore there'll be a void. So in the meantime, if that goes on, if, let's say, for example, it's a year or 18 months before we get the funding and the work gets done, could we be doing something locally for a piece of artwork or something to go in that place, as they did with Nelson's column? Just a suggestion, rather than leave when it comes off, just a suggestion, would it be a useful thing to do? Because that's what they did with art, didn't they? They had little bits of artwork going in there, and it filled the space, and it was publicly very popular. Unless we know that for certain, Shakespeare's going back up there by the end of October, November, December, January, February, whatever.
We can certainly pass that back to that committee.
I just throw that one up there as a thought.
You members will kept updated.
Okay.
Certainly, you can see the actual town hall.
Fantastic.
The timetable pending for this meeting, Tuesday, 16th of November at 6:30 at Town Hall. Thank you for your attendance this evening. It's nice to get slightly normal, and hopefully we will see you in November.